Hey friends, I did it. I made one of the largest stock trades of my life in late 2023. I did this to create massive dividend cash flow for myself in 2024. In fact, my projected dividend income now is up from this single trade, a staggering 11.8%, and my dividend income on a go-forward basis is now at a new record. I am so excited about this, and this position now joins my core four. Many of you know that my core four is Starbucks, Johnson & Johnson, PepsiCo, and McDonald's. All of those I'm reinvesting right now. Those are longer term yield on cost stocks. This one rounds up now the core five as the number 5 position in my dividend stock portfolio. My patrons already know about this. I'll link to my Patreon in the pinned comment below, but most of you out there are going to be really shocked that my new number 5 position in my portfolio is none other than Thug Life Investing Altria. I want to go through this stock in the video today. Let's just jump right into the metrics. As you can see on the screen here, in late 2023, right at the end of December, I went ahead and I purchased Altria, many shares at $40.19. I made this trade on December 28th. Now it's 16.5% off the 52-week high. Now, based on the earnings estimates on Yahoo Finance, I get a forward price earnings estimate of 8.99 for 2023, 8.72 for 2024. But if I actually look at the company provided EPS estimate from the company press release, they're saying in 2023 that they're going to earn on an adjusted diluted basis $4.91. If I use that company provided EPS estimate, I actually get a price earnings estimate of 8.19. It's basically selling at a complete bargain basement level with a PE of 8. It's being priced as if it were to go out of business. I have so much to cover in the video today. Check it out on the screen. I'm really excited about this one. There's just a great feeling that comes with increasing cash flow of this magnitude in one single trade, and just almost feeling like I crushed 2024 before 2024 even started. But I want to keep going. As you can see on the screen, the dividend per quarter is 98 cents. The dividends per year are $3.92. The starting dividend yield that I will obtain on my investment in Altria is 9.75%. Now, mind you, that 9.75% is qualified, so it's taxed as long-term capital gains, which is an efficient way of receiving cash flow that I can use to pay my bills. Now, it gets better. They actually increased the dividend on average by 4.1%, as you can see on the screen. So even though I'm going to be pulling dividends from this, I'm not going to be reinvesting. I'm going to be pulling dividends to selectively reinvest elsewhere, or to basically allow me to turn on reinvestment for other stocks. I'm going to talk about this a little bit later in the video today, but I now have kind of 2 buckets of stocks. I have those stocks that are on reinvestment. They're long-term yield on cost investments like Starbucks, for example. And I have stocks like Altria that I can just use for the cash flow right now. And at 9.75%, it does not take long to recoup my entire capital invested in this company. Now, as you can see on the screen in front of you right now, it gets better, because that 9.75% is probably going to continue to grow by about 4% per year. That's how much they're increasing the dividend. This is a $71 billion company, and this is a company that focuses exclusively on the United States. And so those are the stats from my trade. Those are just some of the backdrop on this company. Now I want to go through what was going through my mind when I made this trade. I want to talk about a lot of the pros, but I also want to talk about some of the risk factors as well. I want to give a shout out up front to my good friend over on Instagram, the Dividend Monster. Check him out. This is a trade that was inspired by a book, The Income Factory, that he shared with me. And my good friend Greg, who I did interview on this channel many times, I'll link to those interviews in the pinned comment below. I've been thinking over, it's literally been a year since my interview that I did with him last, and I've been thinking, Ian, how does this play into your philosophy? I think this is really the first serious Income Factory inspired investment that I've made, but I'll get into that in the video today. So as you can see on the screen in front of you right now, the first and foremost thing that went through my mind is, look, I wanted to make a play in this industry. Why did I go for Altria and not BTI, which is another stock that I own? The reason I went for Altria is I invest in the best brands on the planet. I'm a brand name investor, and this company has two brands, Marlboro and Copenhagen, which are both very strong brands, the biggest brands, the best brands in their respective categories. And so this just fits in my core five alongside other world-class brands like McDonald's. It's the McDonald's of this industry, if you will. Now, what I would say is Altria, big MO, has a stronghold in the traditional combustible market in the United States. I'd say they have a stronghold with Copenhagen in the oral market in the US. I would say as it goes towards electronic or newer technologies like heated products, they have faced some challenges. And so JUUL, for example, is one of the absolute worst acquisitions that has ever taken place, I would say, at least within the companies that I own in my portfolio. But they're now past JUUL. They closed an acquisition on a company called NJOY, and this company has the blessing, to my knowledge, of the FDA, whereas JUUL was facing all kinds of troubles, lots of troubles. It seems like NJOY is doing everything the right way, and NJOY is now being plugged into Altria's huge, vast distribution market, and hopefully it will allow them to compete very strong where BTI has a stronghold, which is in those newer electronic product market. And so that's something very important to watch towards the future. But I think with the strength of the best brand in the world, Marlboro, maybe they could even rebrand here. I think there's a lot of promise there. In the heated market as well, but I'll get to that a bit later because it's kind of a setback that they faced, or a risk factor. But I would say off the bat, they have the best brands, but also those best brands are in some of the older world categories, which is the traditional combustible and the chewable kind of product market as well. But let's keep going. That was kind of bullet point one. I go for the best brands. Bullet point two, as you can see on the screen in front of you right now, is just value. I'm a value investor, and when I start seeing PE ratios for arguably one of the best brands on the planet, for one of the most successful companies of all time, dipping into the eights, I take notice. And so I would say, based on some recent analysis I read, BTI is trading even cheaper, but I was willing to pay just a little bit more for this company because of the brand, because I believe in this company, but also just I'm more familiar with the company. It just feels more like a PPCE and Thug Life investment core 5 stock for me. But of course, the reason I went forth and invested as big as I did, as quickly as I did, is one, I wanted to crush 2024 before it even started. But two, I just saw value there. And I think we're at a point with interest rates where interest rates are probably not going to increase too much more. Maybe they'll even start going down. I know the Fed was indicating some interest rate cuts this year in 2024. Happy 2024, by the way, everyone. But now we had some labor statistics that could possibly delay that. We'll see. It's a very strong labor market right now, which could be an inflationary pressure, which could cause the Fed to slow down any decreases that they were going to do. We'll see. I don't know. But as we see eventually bond yields settle, we'll see capital flow into investments that are high yielders like Altria. And so I thought, for myself at least, I was buying at the right time. And so only time will tell. It was a little scary to buy so much at once, because whenever I make a big trade like that, I'm like, I hope in the next day or two or week it doesn't tank. Just my luck, sometimes that can happen. So far, at least, I've been good. Anyway, I want to keep going. As you can see on the screen in front of you right now, I want to basically cover the hedge factor. I have stocks in my portfolio like Starbucks that I would say in the United States are kind of a hedge against uncertainty, possibly, because it's kind of the same thing as Altria, just with a different product. Customers are going to go and enjoy a Starbucks, maybe more so than normal when times are tough, just because it's a simple pleasure, it's a simple escape, it's a break. But I also look at Starbucks as really a bet on a bright future, because they're placing so much emphasis on China. And if the relationship between the US and China deteriorates, so does my investment in Starbucks. And so it's a huge risk factor with China. And so these big kind of global brands that I own, like McDonald's, Starbucks, generally I would say they're a bet on a bright future. But Altria is different. As you can see on the screen, this is my hedge. This is a hedge against terrible times. And there are a lot of bad things happening right now. I believe, unfortunately, the world is not headed in the right direction. We're facing a lot of wars out there. We had a pandemic. There might be more on the way. What if there are more lockdowns? I was reading someone's prediction recently that there could even be a climate change lockdown. Hey, don't leave your house. Don't use your car. We need to fight climate change. We're going to lock you down. We're facing a border crisis here in the United States. We're facing a devaluation of currencies around the world. There is a lot not to like right now about the future. It's scary. That being said, there's bright things too. Labor market, I guess, is really strong now, and so that is great. But I look at Altria as a hedge, and it's a hedge against an uncertain future. If the future is uncertain, people get worried about an uncertain future, they're going to look for those simple pleasures that they can enjoy, like a Starbucks coffee or a product that Altria sells. And so that is how I look at it. It plays a role in my portfolio. It hedges against some of these other positions that are more aspirational, that are more betting on everything going okay, more or less, on a global geopolitical basis. Altria will be just fine, in my opinion, if things deteriorate. And so it plays that role in the overall portfolio. But let's keep going. As you can see on the screen in front of you right now, this is perhaps my favorite point, and why I really made this investment is cash flow. I will get all of the capital I invested in this company back in less than 10 years, in my opinion. Because the starting yield, it's almost 10%, but it's going to grow by about 4% per year in the future on average, I believe. And so I'll have my capital return in less than 10 years, and then after those 10 years, it's all gravy. And I will not be reinvesting this. I will be taking the proceeds to pay bills or selectively reinvesting elsewhere. I will probably use it even to maybe turn on reinvestment for another company or two, turn it back on, so I can let some of those longer term plays do their thing, do their compounding, do their yield on cost, while I get my cash flow elsewhere from Altria. And so because I'm not reinvesting, I'm going to get the capital out of it, and then after 10 years, we'll see what happens. Whatever's left is left, and it's kind of on the house. And so it's really interesting that way, and that plays into my next point that I want to share as well. As you can see on the screen right now, what I want to share is really the income factory. I started this video today speaking about the income factory. It's a book by Stephen Bavaria. Check it out. It was referred to me by my friend Greg. And I look at this, that the yield is significant enough and stable enough that I am fine right now assuming no future dividend increases. I'm also fine assuming capital erosion. If the capital of this company decreases in value over time, I am fine with that. That is how strong the dividend income is from this particular stock, which is amazing. This is an income factory stock for me through and through, and it's probably the first one that I've really made sense for me, made a meaningful investment in it for me in my personal dividend stock portfolio. But let's keep going. There's some other stuff I want to share. As you can see on the screen in front of you right now, the next one is now versus the future. And so this is really interesting. This is with any company, but it's with Altria too. I was reading their investor day and I was looking through this company. Where are they making the lion's share of their earnings? It's coming from the traditional combustible market. Where is their kind of runner-up? Where are they making a lot of their earnings? It's from the kind of chewable oral division, which would be Copenhagen basically. So that's kind of number two. After that, they've got a lot of big, kind of audacious, exciting bets in a smoke-free future, and those are coming from electronic products like NJOY and possibly heated products in the future. They have a product called On as well that seems pretty awesome, and so they're making those bets on the future, but they're not driving any cash flow right now. Most companies are the same. If you work at a company, you probably know that the company has its breadwinner and then it has a lot of other bets. And usually when you work at a company, you want to try to be in that division at the company that's making all the money, because when times get tough and the company has to do layoffs, unfortunately, the divisions that aren't contributing to the bottom line as much, well, that's where companies will cut costs. But I'm looking at my dividend portfolio a little bit the same way right now these days. I have stocks out there like StarBucks that it's my largest position, but it's not my largest position by dividend cash flow. That will only happen over long periods of time as the dividend snowball compounds and I have meaningful, very meaningful yield on cost, and that will take decades. And so I've got a lot of those types of stocks in the portfolio. It's kind of the equivalent to some of these newer bets that Altria is making. But I also in the portfolio have the big breadwinners that drive the income now that I can use to selectively reinvest, to pay bills, to really do whatever I want, to stack emergency fund cash, whatever. And I look at Altria as filling that gap. It fills a unique gap in the portfolio. And so I also want to share with all of you today some of the risk factors, because there are risk factors, of course, with this particular company. It's trading at bargain basement valuations for a reason. The stock market looks at this company in a much different light than I do. I'm being a contrarian. There's going to be people here watching this video that probably think, Ian, you've made a terrible mistake. And so that is all good. We will check back in 5 or 10 years and see how it has all played out. But let's go through some of those risks. As you can see on the screen in front of you right now, I want to share that volume declines so far in their traditional product have been overcome via pricing power and share buybacks as well. They've been buying back shares, they've been increasing prices, and so EPS has been growing. But will that continue in perpetuity? When I looked at the 9 months ended September 30th, 23, I get a little bit anxious over that particular point. I'm going to show that to you in a minute. But it begs the question, at a certain point, the new businesses, a smoke-free future, will have to take over the old businesses. And NJOY, I really believe in this product. I think they learned a lot of lessons from their mistake with Juul, and so I think NJOY is going to be a huge hit. I wouldn't be surprised if it overtakes all other products in that category. In fact, NJOY is going strong after the competition because they are aligned with the FDA. Anyone they see unaligned with the FDA, as you can see on the screen right now, they're going after them, and so they're kind of playing this role of compliance in their category, if you will. I think NJOY could really do well over long periods of time and maybe emerge as the leader. But as you can see on the screen in front of you right now, who's been here a long time who remembers me talking about iQOS being the future? I really believe in it. It's a big product, a heated product that was developed by PM, Philip Morris International, which is another stock I own, and Altria had the ability to license it in the United States. Unfortunately, what happened is there was some intellectual property and patent kind of disputes between BTI and Altria and PM, and basically it's been ordered that, hey, Altria, you appear to be infringing on patents that Reynolds American has, which was acquired by BTI, so you can no longer sell iQOS in the US. Now, what happened because of all of that is right now it doesn't really seem to me, based on the digging I've done, that Altria has a heated product in the US, and it's sad because a heated product is a really good alternative for their vision for the future. They are working now to bring products to market, and hopefully they will in 2024, 2025, and scale those products and reclaim market share in that category. But it got bad enough where Philip Morris International said, hey, Altria, we don't have a lot of confidence in what you're even doing. And they basically decided to split paths. And Philip Morris actually is paying Altria a payout to get them out of this arrangement where they had the ability to use iQOS in the US. Maybe Philip Morris will independently now try to sell iQOS in the US. Now, what's good, though, in favor of Altria is it all goes back to brand. They have exclusive stronghold and right to use Marlboro brand in the US. So even if iQOS comes back, Philip Morris cannot use Philip Morris International. If they sell that in the US, if they get around this patent thing somehow, they cannot use Marlboro brand. But that's a big risk factor and a big setback. This company is very dependent on the older world products, and they have a lot of work to do on the newer world products. But history tells me that this company has overcome so much and they've evolved so many times, they will win this and get it right in the future. But let's keep going. As you can see on the screen in front of you right now, I want to talk about two things. They have negative equity on their balance sheet. It's also a pro, though, not just a con. They do this on purpose, I think, so they're not a litigation target as much. They get all the cash flow just out into the shareholders' pockets, but their balance sheet isn't as pretty as it could be. The other thing I want to share, though, is the 9 months ended September 30th. And so 9 months ended September 30th, as you can see on the screen in front of you right now. Check it out. When you look at these numbers, you can see that the net earnings are up, but they're not really up. The reason that they're up is they had a loss from an investment in equity securities in the comparable period in 2022 of $3.7 billion. And so basically, if you look at that, what I did, I'm going to share on the next screen, but I just want to hold this screen a little longer so you can digest this information. Actually, the numbers aren't looking so good because you can see net earnings are $6 billion, but in the comparable period a year ago, if you take that 3.074 and you add the 3.707, you can see it's down from 6.7. Now, mind you, this is a 9-month period. And mind you that the company is telling me in their reports that the earnings are growing over time. And so I take this with a grain of salt. It's not a perfect kind of way of looking at the company because it's the first 3 quarters. It doesn't include the last quarter of 2023 yet. We shall see how that plays out. But I did a little number crunching. And as you can see on the next screen in front of you right now, I did a little number crunching. And I just wanted to look at it. So you can see in the left-hand column 2023, right-hand column 2022. And you can see in this particular analysis, I try to get their real net earnings. Real net earnings are obviously down when you kind of factor out those income or losses from investments. And I look at their earnings, their weighted diluted shares outstanding, and I back into a real earnings per share. Long story short, share count is going down, and that's good. But the real earnings per share, it drops in the 9-month comparable period from a 3.7 to a 3.3. It's declining about 10.6%. Again, this doesn't take into account Q4, and so it's a tough comparison. But could this be a leading indicator of one of the biggest risk factors that I already brought up in the video, that is pricing power and buybacks enough to compensate for the decline in this business and the decline in this industry while they wait patiently for the new products to take over and hopefully more than compensate for the traditional products. It's going to be very interesting to see how Q4 comes in, but we know based on what the company is telling investors that they are expecting to grow the business over time and not lose EPS over time. So it'll be interesting to tell. But that being said, when I just take a hard look at the numbers for the first 9 months of 2023, doesn't look so good. It shows some risk there. And so that's where I'm at, everyone. Let me know in the comments below what you think about this particular stock. And also, if you enjoyed the video today, please go ahead and give a thumbs up. Click that like button. It means the world to me. I'm putting it all out there on YouTube. I'm either going to look really good a year or two from now or really bad for making this large investment. But as always, I'm sharing it here on YouTube with everyone. I hope you enjoyed the video. Before I go today, in terms of full disclosure, I am long the stocks mentioned today. I am long Altria, ticker MO, Philip Morris International, PM, and BTI. I'm also long Starbucks, SBUX. I'm long Johnson & Johnson, J&J. I'm long PepsiCo, ticker PEP. I am also long McDonald's, ticker MCD. Other than J&J, it's so funny. All of those are kind of, I look in the same more or less category. I have a thesis, and it's what I do. And so before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. This stock in particular is a very risky one, and it makes sense for me, but I'm just sharing my personal journey. And like I said, we could come back in a year or two and I might look really bad. And so it'll be very interesting to see. I will see you all in the comments below, and I wish you all an incredibly successful, prosperous, happy 2024.